class, which is SME, mezzanine, and equity funds. Also, on the other hand, we report the development impact and the multiplier effect of our fund investments. We report the economic rate of return, we report the average revenue growth, average employment growth, as well as a set of 15 to 20 other metrics that we had developed. And that is not only important in attracting socially responsible investors, but are also increasingly demanded by the more traditional investors in emerging market private equity. So I think depending on the perspective that the fund manager takes, and depending on where you sit on that spectrum of social and economic investment, that path is happily converging.
Julie?
Sure, I'll speak quickly. I think it's very interesting if you listen to David, Fahim, I'm sorry, and myself, our funds are all slightly different. So I think David's looking for a market return, and it's not going to necessarily trade off return for social impact. And Fahim has a list of development indicators and market return as well. Our fund is a little bit more, let's say, organic. Given the types of countries we invest in, Laos, and the type of industries, healthcare, we will not get the same return as if we invested in MFIs in India. It's just not going to happen. So I think we target investors, and investors seek us out because, again, our certain philosophy and value is that we do certain sectors, and we might not maximize the financial return, but we will make a certain social impact. So we will be willing to invest in a healthcare facility in a country that is not, or in an industry that's not high growth, but where we feel there's a compelling social return, even if it doesn't maximize, let's say, financial return, and we give kind of a portfolio return that we expect to give to our investors. So it's just another way to say it's very interesting that we're all social investors, but with definitely different approaches and methodologies.
Julie, sorry to have laughed at your point about investing in MFIs in India. You certainly don't want to invest in MFIs in India at the moment. So you can invest almost anywhere else. My name is Sanjay Sinha. I'm from MCRIL, a microfinance rating company originally, but increasingly a social venture rating company. My question is about risk. Jean-Philippe and others. We've been hearing since yesterday morning that social investors need to remember that Silicon Valley and everywhere else, people lost a lot of money before they made a lot of money. What we find, actually our parent company EDA has been engaged extensively in livelihood support. So we're approached a lot by the CSR divisions of large companies. Our common experience of trying to advise these CSR divisions is that everybody wants the benefit of social investment. They want the feel-good factor, but actually they don't want the risk. So if there's anything even with a minimal amount of risk, they don't want to do it.
I'm sorry, I have to ask you, can you focus on
That's the point. That's the point. How do you deal with it? I've finished.
Okay.
Hi, I'm Abhijit Roy from Unitas Capital. My question to Fahim is, because you're one of the first funds, I think you came and started operations in Bangladesh. How do I, sorry if not. So from a social impact perspective or agriculture perspective, so what has been, your experience? Did your experience of going into a fund has, promoted or motivated others? Because see, Bangladesh has seen a lot of NGO development, and over the microfinance itself has not received equity. So what has been that experience? Did it really facilitate others to come? Or to be motivated?
Thank you.
Thank you for that question. So in fact, yes. And I think our role in Bangladesh has helped facilitate financing for companies in a couple of ways. The first way is by putting in sort of the first risk capital into companies, which had been in the form of equity. We had helped companies become more bankable. So companies that were previously unable to access traditional banks and financial institutions, because of our presence in their shareholding and on their board as investors, have been able to raise additional capital from other sources. Second, and to answer your question more specifically, yes, since we have come into the market, we've had a couple of other local investor groups that have come together in raising capital locally to provide equity financing to small and medium enterprises. And we see that as a very positive development in Bangladesh. At the same time, there are one or two other groups based outside of Bangladesh that are looking in to set up operations here. So we're still at the early stages, but I think we are moving in the right direction in terms of proving out our model and therefore attracting additional investments in Bangladesh.
Thank you. And who is going to take the question on investors who would not like to take a risk?
Well, I can add my quick thought to that, and I'm sure others would too. I think in many of these cases, whether it's impact investments per se or not, going into the markets that we're in, Bangladesh, Cambodia, Laos, it's very, very challenging. And you need an early champion. You need an early anchor investor who has a mandate to go into that country. And once you are able to do that, raise the initial capital, make some investments and prove out your model. And that will become a launching pad for raising additional equity. And in doing that, you also need to get away from sort of the traditional fund model that has a 1 year sort of fundraising period, and then you invest for 5 years, and then you harvest the investment for 5 years. It's very, very difficult to do. And we've found that in our experience in other markets, because in many cases you're the first entrant, and in this case where we're talking about impact investing, you're actually in a new asset class. It takes some time to book those initial deals and show performance, and develop a track record on the back of which you can raise additional capital. So I think we need to move towards a more open-ended, unlimited life, permanent capital vehicle type model that facilitates the structure that is required for impact investing.
Thank you. And David, do you want to add anything? No. Okay. So I think that our panelists deserve a round of applause for. Thank you very much for your patience. We are late about 4 minutes. Sorry about that. And with that, I close this session.
Excellent. Thank you so much, Sasha. I really think that was a well-moderated panel, and thank you very much to the panelists for your candor and some of the specific examples and opinions that you gave. So we'll conclude this panel. Lunch is at noon, so we are running a little bit late, but it's in the same area that it was yesterday, so in the building just across the way. And then we'll get started with the second set of panel tracks just after lunch at 2 p.m. Before you do leave, I would like to thank the panelists and Sasha with just a token of appreciation. So again, a warm round of applause for them. Thank you.